Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, I want to talk about the bear market. Are we entering into it? What indicators and data can we see if we are about to enter into a bear market? And I'm going to share with you what I'm going to be doing or changing as far as my investment strategy if we are indeed entering into a bear trend. So, with this recent downturn in crypto, in Bitcoin, as well as the stock market, the S&P 500 and the Nasdaq been getting to the 200-day moving average and the 50-week moving average. And the 50 week has classically been one of those lines in the sand of whether or not we are in a bullish trend or when it breaks underneath that, a bearish trend. So, taking a look at Bitcoin, let me be clear. Right now, this is still technically bullish. There is some writing on the wall to say that we could be getting bearish pretty soon if we break underneath that. But what I'm looking for is to see how this 50-week moving average holds up. Like last August, if we just get a wick to it on the weekly and a bounce, then in my opinion, we are still bullish. And also, like last August, this is why I use the moving averages, the 20, 50, 100, and 200. If we see this gold orange moving average, the 50-day, move under the 200-day and form a death cross, that would be another indicator that we are indeed turning bearish. Now, we haven't had that yet. The 50-day looks like it may be going under the 100 pretty soon, but it could come out to the 200 as long as price, in my opinion, if price overall stays above this 70,000 mark, give or take, and the 50-day stays above the 200-day, as well as we have candle bodies closing above the 50-week moving average, then in my opinion, we are still bullish and this is a bounce. However, is this a bearish? Could we get bearish? Now, there are some various indicators I've been talking about on this channel for stocks and crypto, but let me start out with this because I don't think enough people have been talking about this one important factor. If you've been in the world of crypto for at least a year, you've probably heard about the 4-year cycle. If not, there are many people who believe that crypto every 4 years has a top. There was a top in November, December of 2013. 4 years later, there was a top in 2017. 4 years later, the top was November 21. So there's still people believing that we might get a crypto Bitcoin top alt season later this year. All right, fine, great. However, there's one important thing I don't think has been talked about yet, and this is sort of my recessionary outlook. If things have changed and are different this time, and that is, technically speaking, as far as the last cycle. Now, let's define what is a crypto cycle. A lot of people would argue that the crypto cycle is what the price of Bitcoin does between the halvings. And so we have the halvings here, and you can see the highest price for the halving in this cycle, or the highest price for crypto for this cycle between the halvings was 2013. Same thing here, 2017, part of that 4-year cycle. Right here, 2021 is what most people would say. However, there was something sneaky that happened this time around. And that was in March of last year, the very top where Bitcoin got to around 74K, the top of this cycle actually happened in March of last year, technically speaking. So I've been wondering about this. This has been one of those thoughts in the back of my head. I think it could line up with some of the other bearish indicators. Now, let me be clear. This does not mean I am changing my strategy yet. I am still bullish and looking for a top later this year until the signs are different in the market. If the market structure, as I talked about before, starts to change, the price closing under the 50-week, the 50-day getting under the 200-day, all those things, then I will change and adjust my strategy. We don't want to have our predictions supersede our strategy and our plan. And our strategy needs to be able to adjust and be flexible for when things change. So let's play with this idea. Again, if we are entering into a bear market, what is the data and this writing on the wall to say that could happen? Well, let me start right here. If there is indeed this 4-year cycle phenomena, then we might be resetting that 4-year cycle clock from March of 24, meaning that the true top, alt season, all that stuff could be 4 years later in 2028. Now, you might be saying, well, what else could there be to show that we could be entering a bear market besides this 4-year cycle, the cycle theory of Bitcoin? Well, there's a couple other indicators to watch for. One is just the year of the presidential cycle, and that is typically the second year of presidential cycles are the most bearish. Okay, a lot of people have been saying recession 2026. All right, there's one bit of data or two bits of data for you to argue that point. Here's another one. The S&P 500 price to earnings ratio. It is inexpensive, not quite bubble expensive, euphoria expensive, but it is on the precipice. It is very expensive right now. The Shiller PE says that we are very expensive and the third most expensive we've ever been as far as the Shiller PE ratio. It could still go up. We might be in a 1998 style scenario where, like the dot-com bubble, we are in an AI bubble. We see it come down before having that euphoric blow off top, 4-year cycle, all that. All right. But regardless, there is no doubt that stocks are historically expensive, and we need to be careful right now because the odds of it moving further up are far less than the odds of, if we are indeed topping, than us going down. So I'd say this is another indicator to say, do look out for bearish price action on the horizon. There's another indicator that we've been talking about, and that is the yield curve inversion. So when this is very simply put, it's way more complex than this, but when the Fed is raising rates, we get this yield curve inversion, and what eventually happens when the Fed does start cutting rates, we uninvert. But during that time, when it is more attractive to get into bonds than stocks, then you see movement out of the stock market. You see prices dip in recessions and the bottoms of the market fall after. And so here was the uninversion in 2000, and we had our bottom and recession about 500 days later. The recession started earlier than that. But the very bottom of the market for the uninversion of the great financial crisis, 600 days, far shorter for the flash crash that was the COVID crash. And now this has been one of, if not the longest and biggest yield curve inversion ever. So that could be taken one of two ways, that maybe the bottom is further away, or because we've uninverted, that we are on our way to the bottom. So there are your bearish signs that are out there. We can even look at the S&P 500 and show that if we go to some of our macro indicators, sorry for the mess of lines here, but you see on the monthly, it's starting to turn red. We have bearish sell signals on the monthly. You can see right there, sell signal overall. We can even take a look at other indicators such as, let's look at the MACD and the RSI. The MACD could be turning down, not quite bearish yet. And so again, we haven't had confirmation. I want to make that clear. But even, do I want to look at RSI or stochastic? I think this kind of adds to our point here as well, is that if the RSI indeed did just top out, that would be another indication that maybe we are heading towards a bear market. Again, I'm not saying we are. I'm not saying that's confirmed. But if so, what is my plan? What is my strategy? How am I going to adjust? So, Mr. Market Psychologist, this is you talking now. You're telling me that if we are entering a bear market and if March 24 was technically the top last cycle, and we're not going to get a top until 2028, then why stay investing in crypto? Why bother? Well, the reason why is if we are going bearish, if 2026 and maybe even later this year is going to be the time where we are on the bottom of the stock market or the S&P 500 in crypto, then we need to be on the lookout and ready to get in on that heavily discounted value. If Bitcoin were to come back down to these lower levels, let's say 40,000, give or take, seems crazy, but if that were to happen, those are the times you need to be ready to buy. Now, in a bullish market, what I am doing, this is my strategy, not yours, but when Bitcoin gets down to these moving averages, whether on the uh, daily or the weekly, some of the moving averages I like, those are some of the dips I look for. I also take a look at different altcoins and I look at various Fibonacci levels. And if they hit the moving averages or Fibonacci levels, I prefer the weekly mostly. But if they're hitting these key trend lines, moving averages, Fib levels, that is one of my more aggressive ways to buy. All right. Now, in a bear market, that changes for me. In a bear market, I am looking to hedge against risk even more. I do want to be aggressive and I do want to aggressively buy at those discounts and where I think the bottom might be. So instead of just buying at the weekly moving averages, sometimes we got to zoom out and take a look at the monthly moving averages. And when we are underneath or at lower moving average support on the monthly or further, you can take a look at stocks as well for this. Those tend to be historically good discounted times to buy. I'm just using Chainlink here, for example. But if we went over to something like, let's just say Amazon, we're on the monthly moving averages. If you were buying Amazon in 2022 when we were bearish under this 50-month moving average, the 100-month, those would be good times to buy. But that's different than how I'm buying in a bull market. In the bull market, I am fine getting these bounces because this is still bullish. You can see candle bodies never fully closing underneath these moving averages. The moving averages never became resistance. They were always support. When they were resistance, okay, we wanted to look for those lower moving averages. So that's one key thing I look for. But other factors I look for, I've shown you this before. This is my bullish case buy sell signal indicator that I like, but it's better to be used in bullish markets. I do not like this buy sell signal indicator that is based off the Heikin-Ashi trends because even in bear markets, this can get faked out, as you can see right here, and we can still go lower. So one of the indicators I like as a buy sell signal indicator a little bit more is this UT bot alerts. And this one, you're not going to get as much of the very bottom, but you will get more of a confirmation for something like Amazon right here, if you will. So again, you're not getting the very bottom, but you are getting that confirmation. And in a bull market where I typically swap between the weekly and the daily time frames, in a bear market, I'm swapping between the monthly and the weekly time frames. I'm trying to see, is there anything possibly bullish coming up? Am I wanting to be a little bit more aggressive because there's a buy signal on the weekly, but not quite yet on the monthly? Okay, so that is another sort of indicator that I look for to make sure that I am hedging against that risk. Let's go back over to Bitcoin, and so we can prove our point here. Sorry, let me add that back on here. All right, so you can see on the monthly, this has overall been a really great signal to use outside of right here, but that was after we already went to new all-time highs. So if Bitcoin, similarly speaking, came down and we got a buy signal right here, but you believe we're still bearish, that would be something to watch out for, that it may be a fake out, but that's because it's already pumped a lot. All right. But we can't just go only off of buy signals. We have to look at other indicators as well. And this is where I like some of the most classic indicators, and that is the MACD and the RSI. So the MACD, you can see when this turns negative, then we know we are bearish. When we are starting to round out and starting to go up on the MACD, this is on the monthly now. You'll see once the MACD starts to get lighter down here, that has been pretty good at telling us where the bottoms are. So the MACD has been a great indicator. Again, this is on the monthly. This is where we are looking for bottoms and confirmation against the markets, whether it's stocks or crypto, to keep falling. Excuse me. So the MACD is one of those. You can also take a look at, I'm sure stochastic will show this too. The stochastic, when it starts turning upwards from an oversold market. Okay, when it gets oversold in Bitcoin, last number of times it's been oversold, when it starts to curl back up, those have also been good times to buy. This would be the one time again where we had that fake out. So no indicator, I want to make this clear, no indicator is absolutely perfect. But as you can see here overall, that when we marry the MACD, the stochastic RSI, the buy signals, they would tell us that these could be some fake outs in these areas right here. So no indicators are perfect, but you do want to watch out for when that happens. If you're wondering, are we going to get a 2021 summer 21 style scenario? It's hard to say. You never know. But odds are, if we were to turn bearish and just go down, then maybe not. But again, we'd have to see. If the stochastic comes all the way down and price of Bitcoin stays, I don't know, 50 to 60,000, then maybe. Then I'd say you could look for one of those types of scenarios. So overall, here's my message in this video. If we are indeed going into a bear market, I see a lot of fear out there that we are going into a bear market. I mean, heck, there's literally extreme fear in the crypto market, and we have not seen this level of fear since right before the last bottom of the last cycle. This was the summer of 22 when fear was that deep. The summer of 22, that was right in here when Bitcoin just fell off a cliff. So we have a lot of fear in the markets, but you don't want just the fear and greed index to drive your decisions. You want to take a variety of factors. So again, if what I want you to see, as far as this is just my strategy, I am looking to alter my strategy if we go into a bear market. If those moving averages break, we see the S&P 500, the NASDAQ break under the 50-week. If those are breaking under the 50-week, and we're seeing the 50-week get broken for Bitcoin, because if the S&P is going under the 50-week, Bitcoin's going a lot deeper. If we're seeing these bearish crosses, the 50 under the 100 is sort of a warning shot, but once the 50 gets under the 200, let's go back in time here. See, right here you can see the 50-day to the 200-day. It just touched, but when it got under here, obvious start of the bear market here, this was, of course, that classic fake out. And again, no indicator strategy is perfect, but I am fine being more defensive in this style scenario. So again, if we go bearish, I have a different strategy, a more defensive strategy. I'm not just buying on the way down and saying, hey, I bought the exact bottom, I'm a perfect investor. I'm not saying that. But when this breaks, I'm being very defensive, waiting for those confirmation signals, the MACD, the buy signals on the UT bot alerts, the RSIs, to start curling up, flipping positive, getting more confirmation. And the reason why I don't need to buy the exact bottom or dollar cost average, I am looking for confirmation of bottoms and a break of the downtrend. The reason why is because I'm looking for a profit sandwich. I don't need to eat the whole sandwich with the bread all the meat, the condiments, the lettuce, and everything. I just want the middle of the sandwich, okay? The meat, the condiments, the lettuce. I don't need to eat the bread though. So, as far as my profit sandwich, that is why I don't need to try to buy every single bottom. But you can DCA there. Let's keep going back. The 50-day under the 200-day. Here, we went further down, broke up, and then again, 50 under the 200. That was, of course, COVID times. Let's look after the 2017 top, 50 under the 200. I mean, this was no doubt the start of the bear market. But if you remember when we zoomed out on the monthly for 2017, well, one, we have these moving averages that have overall been deep value. So after the 2017 cycle is the 50-month moving average. After the 2021 cycle is the 100-month. Are we going to get down to the 100-month again? That'd be in the 30,000s. So that'd be something else to watch for. But I'm also looking at the MACD, the RSIs as well. Are we getting that positive roll up that we had those 2 times? Are we getting those buy signals? So let me know what you think in the comments below. Again, I want to be clear. I do not believe we are bearish yet. I do not believe we are in a bear market yet, but I am open-minded to it. You have to be. You have to be flexible. And so far, until these supports break, I am still looking for one of those 4-year cycle, give or take, style scenarios. I'm not totally married and bought into it that it has to be every 4 years just because. I think that's a foolish way to look at the markets just based off timing alone. But if we are to start breaking down and indeed enter a bear market, that is where my theory is going to go to this 2024 top saying, maybe this was the writing on the wall. That last cycle, when we technically had a top in March of 2024, that reset the 4-year cycle clock, if you believe in cycle theory, and that the next top would be 2028. So, not saying that has to happen, but if we are to remain bullish, then what we are looking for, what we want to see is a 1998 style scenario. Is that probable? I have a hard time saying that it is, but you never know. And if it does happen, I'm ready for it, and we'll see when we get there. But in my opinion, even though I'm looking for the 4-year cycle this year, I do think it's more probable with the writings on the wall that 2026 is going to be a down year as far as presidential cycle, yield curve inversion, where the Shiller PE is, all that stuff. I do think you need to be defensive minded, and even though we want the cycle top for crypto to happen this year, we need to be ready just in case it doesn't. And now is the time to start thinking about it before all the bad things happen, if we do indeed enter into a bear market and the top is further out than we are planning for. So let me know what you think in the comments below. I wanted to do a bonus video and talk about this, just put this out there. It's just some things I'm thinking about. You can tell me in the comments if you believe I'm right, wrong. What do you think about the 4-year cycle from the March 24 top? Do you think there's some legitimacy to that? And if we are indeed entering a bear market, that is the time to be excited about buying discounts, making sure that we are buying those bottoms. And again, being careful with how we are buying. Instead of being as aggressive, this is me now talking, instead of me being as aggressive buying those fib and moving average supports, I am looking more for confirmation and a defensive strategy should we break the bullish uptrend. So thank you for watching this special bonus video. I'm sure I'll talk about this a little bit in the rainbow chart video that I'll do tomorrow. And I hope y'all have a wonderful Sunday. Take care.